Test, test, test. Hello, hello. Good morning, good morning. All right, let's see. All right, so X isn't working, so I'm gonna do a mini 6:30 club. Hopefully everyone's feeling well. I just want to make sure that you guys can hear me. Nugsy says I'm good. Christina says hi. Tappan says we could hear you. All right, there you go. So we'll do this for the YouTube. Anyway, good morning, everyone. My name is Scott Redler. I'm the Chief Strategic Officer at T3 Live, founder of Red Dog Mindset. Uh, Feeling good. Already did the 20 at 520 this morning. Had a nice sweat. For those of you who tuned in, I appreciate you. We get a nice little workout in the morning. I went from 15-pound weights to 20-pound weights. Was getting a little bit out of my comfort zone, just like the market, right? You got to get a little bit out of your comfort zone. What up, Jim in the UK? So anyway, let's take a quick look here. So, I think a lot of traders like me was saying yesterday felt very close. Yesterday, market was down. I don't even know, almost 3%. You did feel a little bit of fear, a little capitulation, a little bit, not a lot. The oscillator went down to minus 55, which is oversold. Minus 40 is oversold. Minus 55 is pretty oversold. I've seen us get to minus 70, minus 80, and then you really feel like, okay, now it's like an oil slick. You throw a match and you friggin' can light up the shorts. Here it still feels kind of like a de-risk. It feels like, just people concerned that the economy is going to slow, that tariffs are going to make it tricky out there. Um, that you have Doge having cuts, taking money out of the economy, jobs out of the economy. You have the Fed being less accommodative. So it's like, all these things are pulling back. So the PE of the S&P that was 21, 22 needs to come in, especially if we're going to slow down. So anyway, with that being said, the question is, hello, Scott, heading to the gym. How about looking at the VIX? I could do that too. Um, you look at the chart here. This is a chart of the S&P cash. So I like to map out levels. I'm a prepared guy. And, first of all, right here, when we broke 604.84 right there, that was like one spot that said, hey, maybe we are in a little bit of trouble here, and then, this bar that just kind of sliced through this ascending channel was the day that I think a lot of us went from like a portfolio approach to a tactical approach. And then you had to move where it came in and then retested and was really below the 8 and 21 day. A lot of times I do a lot of teaching about the 8 and 21 day, about how when it's above it, you could be in a portfolio approach, you could be massaging positions, you could be making really good money, in active longs in the best stocks out there. And then below, you have to be careful. And boy, does this like validate that entire strategy all the way down. So yesterday at 55.64, which was the low in the S&P cash, we were down 9.5% from the highs. I did post a link to show you guys, what the average decline over the years have been. So if you go to here, what you should do, let's see, I put it on this. It shows you, this is my rise and grind, a little fun stuff. This slide shows you all the different drawdowns that we've had over the past 30 years. So, 2024, we went down as low as 9.7%. And remember, that was August 5th. Then the year before, we didn't really come in much, 5.9%. So we already came off a lot more than that this year. And then in 2022, we were down 27%. So that's why you got to be a little careful when you're trying to, put money to work in like a blood in the street account, like I'm trying to do, which we'll get to. You don't want to do it too fast, but then all of a sudden, here's 5, 5, 5, 10. And then obviously 2020 was the pandemic when the world shut down and people thought we were going to go through the worst financial crisis ever. And it turned into a V bottom. So anyway, it's pretty cool to look at all the different reasons, that we sold off, because there's always reasons, there's always a narrative. And so people like, hey, Red Dog, what's the narrative here? Like, why are we coming in, in 2025? So really it is because, again, they're trying to rein in the what's it called? The deficit. I don't know what the number is, like 38 trillion. So they're trying to, string out some of the fraud, some of the excess. We can't keep spending the way it's going. So it's like a little bit of tough love. And the first time Trump was in here, he measured himself by the stock market. Now he's saying, hey, we're going to have a little bit of pain first, and then first comes the pain and then comes the gain. Almost like when a company, goes through a few like bad earnings reports, and then finally they do like a kitchen sink, report to get all the bad news out of the way, and then they start the repair process. So we're in that process where they're trying to wring everything out, and who knows how long it's going to last. But anyway, you think we are about 9% under the 21-day. That's a big move. Yeah. So John Boston. So first of all, this is everyone from YouTube. You guys should watch me on YouTube too. I got to figure out how to get more people on YouTube versus Twitter, because lately Twitter is being hacked because everyone hates Musk now. Besides the president bought a Tesla today. Anyway, yeah. So if this is like an some people think this is like the ABC pattern where this is your A move lower, your B move would be a bounce towards like 57.11 or 57.83. Every time we've gone to the 80, the 8 day, it's been rejected. So some do think that, hey, we need to have some kind of retracement back, to then be able to sell, which would burn off the oversold condition. That could be here, that could be here, that could even be there. But you don't know. We haven't started it yet. Like right now, the SPYs are up $1.92, and this is a kind of crappy setup. Set up to the fact where it's like, could be choppy back and forth. The SPYs can go from up 2 to up 3, 4, and then go red, and then test the lows and come back up, and it's just like it's not easy. But anyway, but for now, that's that. So one other thing before I get into some charts, this is the daily chart, so 9.5%. So you go to the weekly chart, and you'll see I kind of gave you guys some levels of of where things are at based on if we do wind up continuing to head lower. So right here at 9.5%, I've put a third of my wife's blood in the street account to work. That's an account that I can't put flows in. If you have a 401k, you don't care about blood in the street. Just put your money in every single month. You're going to have a lot of it in 20, 30 years. Or, if you have a 529 for your son, if he or she is 6 or 7, this is good for you. It helps your average cost. But my wife has this blood in the street account where she can't put money in that I'm managing. So I've come up with a way where with this, when we get over 5% off highs, I start to cost average it in. So on Friday, I put 25%. I added yesterday. She's a third. So just say her account's $300,000. 100,000 is put to work. So 100,000 is put to work at an average of 8.5% off the highs. So what I do is I map it out, and you have to map out far. Like I'm not going to like put money to work every 1 or 2%. The next level I would put to work would be maybe below 54.06 would be so it would be like a thirds at 8, and then I'd maybe go to half if we get somewhere over here or in between here, which I'm not saying we will. A lot of the times, during these corrective phases, I was only able to put 2 tiers worth, but net her a lot of money. And then here, I think I was able to put 2 tiers too. I didn't go 3. So right now I'm in a third, and we'll see, what happens. So now, if you take a step back, like you would say, hey, doesn't it make sense, Red Dog? We go from here, we bounce back to 557.73. We get rejected at the bottom end of this channel, and then go down to here or here. That would make sense, or here. So these would be like 2 spots that if we did get some kind of retracement move back, maybe it's the CPI, maybe who knows what will be the cause of it, then I would say, hey, you could bounce back to here. And then from here, maybe put some puts on, do whatever, and then we see if we go lower again. If you remember this August 5th move, which is right here, we had a V bottom. Everyone thought we would, get rejected into this bounce back, and then all of a sudden we went back to highs and held here and went to new highs. I don't, so many things could happen. You don't want to like overload yourself with too many thoughts of what if this, what if that, what if this. But obviously you want to be prepared. That's why, I like to do this whole thing, because when you're in the moment and everyone's getting scared and everyone's calling for the world to end, that's usually when it's the best time to buy stocks if you can handle it. So anyway, I'm not going to go over everything. All I know is let's go over Tesla real quickly. So Tesla was down $5 yesterday, when I was leaving here at 5 o'clock. And then I guess President Trump's tweet about how he's buying one and how he's supporting and how everyone's being such a jerk, considering how hard he's working for the U.S. to cut costs and cut the deficit and do all these things he doesn't have to do. So that caused a little bit of a rally that brought the futures higher. So right now, Tesla's up 6. It's at 228. This is 230. Someone's like, where could a bounce go for Tesla? I guess, you'll see it was as high as 233. So 238 would be in the last point of reference. Um, so this gap is gone now, by the way. So we could take this off. And some people are like, hey, Red Dog, you know what? I love you. I'm like, you love me? Why do you love me? I'm like, well, your method about 8 and 21, they got me out of Tesla, even as a not even as a prop trader, as an active investor. I'm like, wow, when did you get out? They're like, got out right here. Actually, right there. This candlestick right here. I remember because I was long this one too. And I got out, and that was the day that it really changed. That was at January 24th. This was at like 405. Some people are like, oh my God, I can't believe I didn't sell it with the Red Dog reversal at 488. But, selling it, here around 405, not so bad, considering, now it went down to as low as 220 and it's a 228. You did pretty damn good. And from there, every, lower high broke here, low, boom. So having the right method helped. Anyway, with that being said, so there's a lot of little things. And then, things are, look at Reddit. Reddit also gave you a clue to get out of the way at 211. And what a nice trend above the 821 day. And then boom, 211, done. And then from here, it tried to pause where it had a bunch of support. And then this candle said, nope. It turned, lower level that could have rallied into a rejection, bearish engulfing, move lower. I actually tried it yesterday and I lost money. But a little money. I tried it and didn't get, I didn't get stubborn. I tested a level. I bought versus a level and get out of the way. But if you were a swing trader saying, hey, this looks good, bottom tail looks ready to go on this candle, you had to say, nope, it's not ready to go. I'm out. Anyway, so here you are. The low is what? 105.53. Reddit's what? Up $3. You're not missing much. And then Palantir also. Palantir, I tried to give you the same kind of clue saying, hey, it looks like we're holding 78-ish, just like Reddit looked like it was holding 150-ish, but then once it breaks that level, after it can't hold that level, then it can go even lower. And that's what yesterday was. That got me out of it. And now we'll see. It was a lot lower last night. Where's Palantir now? It's up 45 cents. This was down 450 last night. So, again, this kind of open is just really hard now. SPYs are up $1.80. It could play around for the first hour. It could go up another $1.50 or $2 to 565 before turning lower, right? It could, this would be resistance 1, resistance 2. That could happen, and still go lower. Or it could, play around and then try and go red and test this and see. It's just not an easy open. We're oversold where they could squeeze you as a short, and and adding on strength in the last week has not been good. NEO's up 7% pre-market. All right. I have NEO options. Oh, wow. That's good. It's nice. It helps a little bit, considering I don't have a whole lot going on. Yeah, Robinhood. So the NASDAQ right now, they're saying is going to be all night long. That's cool. So I be honest, I don't have a lot going on here, guys. You look at, I got tactical. And I'm trying to put on some risk. I have some leftover NEO March 21st. So I went out, so that's going to help. So that'll help this morning. I did buy some Dash options yesterday. I had some going into the addition of the S&P, and I added yesterday that tried to hold up. Bob I have from last week, which doesn't look great. TLTs I've been making some money on. I have ASTS that I might have to go out a little further. I have March 28th and March 14th, so that's a little bit too soon. So I sold puts yesterday, the 549s into that down move. I sold them for like 90 cents saying, hey, we're going to be down another 10 points tomorrow. I wish we closed on lows. I would have sold a lot of premium for today, not for tomorrow because of the CPI. But if grandma had balls, she'd be grandpa. It is what it is. But anyway, so listen, at 647, just to simplify it, SPYs, if they want to try and push the envelope a little bit, it's only about 562 in no man's land. If you short here, they can still push it to 565, which is yesterday's low, and might go up before it goes down. And if you think that there's room there and you're buying it up too, with 7 points off of this low, so that's why today makes it a little bit trickier with this type of open. So take it slow, take a deep breath, and just know that complicated times lead to better times. If you have multiple accounts, I've taught you guys about my 7 accounts. There's always ways to take advantage of price action if you follow your rules and your process. I don't know why the Twitter's not working as far as the 630 Club, but if you're watching on YouTube, very cool. And just just take a deep breath. A lot of people, not saying you want to think about other people in pain, but there's not a lot of people killing it out there right now. Even shorts have had some trouble here and there. So with that being said, though, you always need a reset. You always need this type of environment to create better environments. Because if you're all of a sudden just ripping and roaring all the way up, you never get a good average cost. There's no ringing of the excess, and it happens. Cycles happen. So that's why we have our rules and process, our moving averages, our tier system, our multiple accounts, and we keep our mind right so we don't get caught up in in the news flow headline or the craziness of social media. We got to stay grounded and stay focused. Have a good day, guys.